Okay.
You got it.
Good, good. As I said, welcome all to 2021, and I pray that 2021 exceeds the mess we managed to escape in 2020. And I want to welcome you to my seat, my annual seat, as it were, in the big chair, teaching this wealth building tax secrets class. It's one of my favorites, primarily because it affords us an opportunity to take a look at how we can leverage our home in the success of our young living business. So this particular class was taken from a couple of books that was written by Mr. Sandy Botkin. Sandy is a former certified public accountant. He was also a former IRS tax attorney and a senior tax consultant specialist. So he knows a little bit about how to take advantage of the system, and I'm going to do my best to provide you with some of that insight tonight. So without further ado, the first and most critical thing that you need to do when you're thinking about setting up a home-based business is to get expert help. What that means to me is that you're going to find somewhere in your local area a small business tax accountant. And the reason for that is you will not be able to keep up with all the various changes that the IRS and these thousands of pages of documents that they produce whenever they allow things like these forays out of the ordinary. So you need to have someone on your side that pays particular attention to what those are to save you a lot of headache. And as Sandy says, it allows you to lower your taxes big time. And anytime you can save $1 in taxes, that's a good day. So let's take a look at what we're going to be talking about. This was kind of an interesting lead in for me. You are brain dead. And there's a reason that he's saying that, and we're going to discuss it in just a little bit, but it's a view that there's something out there that you can have that will afford you an opportunity to invest in yourself and become financially stable in the future. And if you don't take advantage of it, that's the ship you're on. We're going to also learn how do we can deduct fund. And there are many, many ways that you can deduct fund in Young Living because we do a lot of things as a company. How do you turn your vacation into a tax write-off? If you think about it, you probably do it unbeknownst to you that you could actually have written off what you did. So we're going to talk a little bit about how you do that. Writing off your vacation time and let the IRS help you take a vacation. That works for me. Using your car is a real gold mine. It does take some effort for you to do this, and I'm going to go a little bit more in detail later on in the presentation about what you have to specifically do to do this, but it's within the realm of possible. So it shouldn't cause you a lot of problems to get this done. Creating your home office, there's a very, very specific definition by the IRS for what a home office is. And we're going to talk about that as well. The IRS wants to know if you're doing this, is this a business or is this a hobby? And what you have to do is you have to prove to them that you are in fact in a business and you're doing things in a business-like fashion. So we're going to go over some of the things that they critically analyze to verify whether or not you are a business person or this is a hobby that you're trying to capitalize on. Again, the IRS is very, very rigorous about what it takes for you to be able to deduct things in your business. So we're going to talk about how to avoid audits, or if you actually get called in on an audit, how to make sure that you have all of your ducks in a row. In the 21 years or so that Christina has been in Young Living and building a business, she's been audited twice. And both times it had to do with personal development training that she went to, that the IRS didn't necessarily like as a method for improving her business posture. Everything else we've been squeaky clean about. And again, the most critical piece that you can do is to find yourself a small business accountant, because that worry won't be on you. They will be taking care of all of the nitty-gritty kinds of stuff. All you do is provide the resource information for them to get the job done.
Gotta admit both of them now. They're waiting. Admit them. Admit them. She's waiting.
I don't see it admit.
Okay. She's gone. Close that little box.
Okay, find that small business accountant. As I alluded to, what Mr. Botkin is talking about are the very two separate types of tax laws. You have one for people who are working a traditional job where they get and invest in IRAs and 401ks and they get W-2 forms at the end of the day. Then there are specific kinds of laws that pertain to small and home-based businesses where you do a 1099, you get a 1099 as your IRS reporting vehicle. And you have to be able to understand what piece you play in to justify what you're going to be claiming on your tax forms. So we're going to take a look at what that means. Certainly there's some major reasons, particularly now in this period of COVID, there's some particular reasons why you might want to start a home-based business. Previously, we had a lot of corporate profits. I remember last year when I did this class, they were talking about how well off corporations were, but the income that they were getting wasn't being generously trickled down to the workers. So you needed a way to subsidize what you brought home. In periods of economic growth, you would think that it would go across the board. Everybody would have a rainfall, but typically in corporations, they look out for their bottom line and their members might not share so much equally in the good times. And then you have things like downsizing and right sizing and all these closures. And as you can tell over what they're talking about in the economy right now, COVID-19 has wreaked havoc, particularly on small business. So you really need to take a look at this particular opportunity to get ahead financially in your business. And as we've always known, it takes both couples working anymore today to be really successful in your day-to-day life. So we're going to look at what it takes for us to get where we want to go. What kind of business? If you weren't in a Young Living business, that question you'd have to decide on. But you already know a lot of these things, and this is a reason for you now to take what you've experienced in your use of Young Living and turn it into a profit-making vehicle for you and help you teach others how to become health conscious and introduce them to products that are globally understood and known for their quality. Certainly, whatever business you get into must be your heart's desire, because if you're going to work something that you don't like, there's a very good chance you're not going to be very successful in it. Because you are Young Living product users already, you already have a whole lot of knowledge about the products that you're going to be talking to people about that they have no clue about it. As a matter of fact, I was in Spectrum the Charter Spectrum office in the Shiloh Dearborn area a couple of days ago, and I had one of these Young Living masks that list, it says, we have an oil for that, and it has things like depression and headaches and that kind of stuff. And this young lady came up to me staring at my face, and it took me aback for a second, but it dawned on me why she was looking. She was reading the mask. And I got an opportunity to talk to her about Young Living oil simply because I had a mask on. So knowing about the products that you have available for the general population is a plus. So the more you can learn, the better off you're going to be in this. Although there are some in Young Living who decides to be licensed specialists in other avenues that you can use your Young Living products in, it's not necessary for you to go that particular path. That's a decision that you can make. And as we've been seeing now for the past year or so, there's a whole lot of work from home kinds of situations now. And there are some who have wanted to do this forever, and now they're getting an opportunity to do it, and it gives you the same kind of opportunity. And this is another beautiful avenue for your being able to build your business, because you don't have to be in front of people all the time. You have to be able to communicate with people, but you don't have to be in their face physically all the time. And working from home affords you an opportunity to do that as well. And what's a real neat benefit of Young Living's multi-level marketing managements is that you don't have to have overhead. Now, I promise you that if you're a conscientious Young Living user and you subscribe to those monthly buying packages that Young Living offers, you're going to develop a lot of overhead. And it's for your own personal use, but you can decide how you're going to use that. So it's a plus that you don't have to have it, but it's a major plus if you do, because you can always introduce somebody to something that you have and let them physically try it. And that might be just the leverage that you would need to get them to consider becoming one of your clients. So those are the types of things you need to consider. People, are you good with people? Can you talk with people? And the model that I was talking to Gail about earlier when she came on was network or multi-level marketing versus the traditional business scheme. Network marketing allows you to become your own boss. And once you learn how to do it, you have the perfect vehicle with Young Living to set up this business for yourself. Young Living is known around the world. We have our own farms. We all know the quality of the product that we put on the street. So it's easy for us to communicate to others in real time about the quality of what we do. And unlike when we first got in some 20 years ago, Young Living and other sources have been producing all kinds of training materials now. If it was something that you wanted to use, you'd have to build it. And if you weren't skilled at using tools that could get you to do that, then you were kind of a little bit up the creek until something came out. When you go to convention and you go to the various stores there that sold these support products, and you could pick them up there. But Young Living is doing the very same thing now. So that's not an issue anymore. And again, you don't have to have inventory. But as I said previously, if you're taking advantage of all the purchasing packages that come out month to month, then you're probably going to develop inventory that you can use any way you want. And the key thing for your intervention with new clients and new people you bring in is that once you all decide on what it is they want, you go to the company and it comes directly from the warehouse to them. So you don't become the middle person on trying to make sure that you can find them after you've had them attempt to get their own experience. So it's a really, really excellent opportunity for you to train others in the same fashion. And that's what the key is with Young Living and the business model. It's a relationship business, and you get the opportunity to develop relationships with others simply by attempting to help them come up with fixes to issues that they've identified for themselves to you. So it makes sense. This is a path you might want to take. Now let's talk about that linear versus multi-level marketing. In this sense, the linear model is the normal business model that we go by now, 40, 40, 40. You work 40 hours a week for 40 years to hopefully get 40% of your retirement pay based on your highest salary. Wouldn't it be nice if you could decide how much money you wanted to make and you be the sole driving force in getting there? There are some downsides to multi-level marketing you really need to be conscious of. You need to be able to assess what it is, if it's not Young Living, what it is you're looking at doing, and whether or not you can make ends meet as to how you make what you make and what happens to get you there. I liked this picture of Forrest Gump because it reminded me of what Jenny told him. If you see something that looks shaky, run, Forrest, run. So if you're in the market for finding a home-based business and it's not Young Living, be very, very decisive about how you go about vetting what that is. And the thing that I like about the folks on this call is we've already decided the path we're going to take. And what Sandy was doing was giving a blueprint for anybody that wanted to get in the multi-level marketing business. So it played very, very smoothly into what I was doing in developing this training session. One of the other things that I thought was quite interesting, and hence the heading, So You Want Fun. When you have a business and you are introducing new clients to the business, you need to have venues where you talk to them about whatever it is you want them to become familiar with. So if you invite a client, say, out for lunch, you get the opportunity to not only pay for the meal for them because you invited them to hear what you had to say, or if we had some entertainment venue that comes up in your area and you want to take your prospective client to this, you can deduct the cost for that. When you set up your home-based business, you're certainly going to have some kind of tools to work with. You're going to buy a computer, you're going to buy a printer, you're going to buy flyers and stuff like that to help advertise your business. You got to have a phone. All of this stuff affords you an opportunity to be successful, and it affords you an opportunity to deduct the cost. And you'll see on the back end of this how lucrative that can be for you. Any associated entertainment that you take your prospective clients to, you have the opportunity to deduct when you talk to them about your opportunity. If you have a spouse and you want to keep the social relationship going, and the prospective client that you're talking to brings their spouse, you can bring your spouse along, and you can also write off the cost for that expense. And then finally, this is one that I don't really subscribe to, Dutch treat. It allows you to do it, but why would you want to? If I'm introducing a prospective client to my business, I'm not going to cause them to pay for their meal when I'm trying to interest them in my business. So you can do it. The vehicle is there that will allow you to do it. I wouldn't take advantage of that particular track. So you can have fun and deduct it at all as well. Let's talk a little bit specifically about what we can do. Say John and Mary went to lunch. John spends $25 for pretzels. Do you think John needs to keep receipts? According to the IRS, it's not necessary. But John has another lunch appointment, and this time he spends $85, which includes drinks. Does John need a receipt for that? He certainly does, because the IRS rule is any expense $75 and above, you must have the receipt for. Well, I subscribe to an old Arab axiom, and it says, put your trust in Allah, but tie up your camel. What that really means is, I don't care what the IRS rule is, reference expenses that I incur while I'm conducting my business, I keep them all. And from the littlest one to an $85 lunch bill. There are legal requirements to your being able to deduct meals and business-related expenses. The IRS says, when you invite a prospective client to lunch, they need to know that you're going to be talking about your business. So you need to tell them up front. In that course, you must discuss business either during or after the meal. The meeting must also be in a place conducive for conducting business. And if I said earlier, as I said earlier, if that client is bringing a spouse and you want to bring your spouse, the IRS will allow you to deduct the cost of your spouse's meal because they view your spouse coming along as social interaction for the spouse of your prospective client. They may or may not be as involved as the sole client is. So they want to make sure that they don't get lost in the traffic or get lost in the dialogue. So they have someone there that they can communicate it with as well. And it looks really good when the spouse and the presenter are on the same sheet of music talking to the prospective client about the same thing. They even get the idea from that this is a joint business that we can get involved in. The real critical point in terms of this legal requirement is documentation. You must document what activities you're going to be deducting with who you presented to, where you did that presentation, when you did that presentation, why and how much. And those are the kinds of records that you're going to keep.
Can I add something?
Add something.
So Young Living offers a program called TaxBot, which he's probably going to talk about. And it allows you to put the who, where, when, why, and how much. And basically what I do is, so if I go to Columbia and I take Pam out to lunch, or vice versa, she takes me out to lunch sometimes, and we're going to talk about the business. I have the receipt that tells me that I went to a Mexican restaurant. It has the date on there. It has the amount that I've spent, including drinks. And I know it was with Pam because we always go to the same Mexican restaurant. So I put Pam Hyen in there. And then, I put business. That's why. All I do is there's a tab and I click business and it goes into the business tax deductions. So he's going to talk to you more about TaxBot, but sometimes it sounds, oh, do I have to write all this stuff down? No, you've got the receipt. You've got all the documentation you need. It's just when I put it in TaxBot, then it's all ready to go to my tax man. All of that stuff is in one place.
So again, we talk about that Dutch treat thing. You can do it, but it doesn't look businesslike. If you're taking a prospective client out for a presentation on your business and you're going to charge them their meal. So it's there, I'd leave it alone. If you do home entertainment, when you do classes at home, any money that you spent for, say, refreshments or training materials or whatever, what have you, to get started in your home, those are items that you're also going to keep receipts for and document with who, what, why, where, and how much, because that becomes a part of your tax history. And in our case, when we have 12 or more people, we put on a product display because most people only know that Young Living has oils. So here's an excellent opportunity for you to introduce them to other things that's available out there. And if you have those little transfer buying sheets, that will be another opportunity to give them one of those and talk to them about how to get rid of the toxic chemicals in their homes and have them tick off on the top sheet what they use already. And lo and behold, you lift that sheet and look at all the Young Living products they've already selected. So you have a segue into introducing them to the whole venue of Young Living. So we've talked about when you need to discuss things with the prospective clients. So if you're having a business meeting, you're going to have to discuss business, and the client needs to know going in that you're going to be discussing business. You're going to document everything with those 5 headers that we had: who, what, where, when, why, and how much. You can deduct all fees, tickets, and associated entertainment costs and expenses. Remember to keep the receipts. I would even keep a journal. As Chris said, when she goes to Columbia, she sort of writes out in longhand all of this, what went on with who and all that kind of stuff. So it keeps a ledger so that you understand why you're claiming what you're claiming, and you can back it up with receipts for those dates.
You can actually use your calendar.
Yes.
As that journal. And I keep my calendars for the tax year in case I was audited and they wanted to prove that I went to Tennessee for a weekend to train my group down there. Then it's on my calendar. I have my receipts for it. I have the people's names, that are in my organization that I went to train. So it's just all kind of marries up.
Yep. It merges, and you have a complete picture of the expenses that you incurred as a result of doing your business. And it goes well to supporting for the IRS that this is a business and not a hobby. Again, if you're entertaining with your spouse, you can conduct that as long as there is another spouse there. If you're entertaining at home, any cost association with the classes that you're giving at home, also deductible. And if you're going to be giving these small training sessions or parties or however you define yours to be, have a sign-in log so you can go back and marry up the people that you have introduced and in what sessions you did it.
I want to give you a quick example. So this Saturday on the 23rd of January, we're going to have a make and take in my home. And we had to buy bath bomb molds, of course, from Amazon. And then citric acid, we had to buy that. We had to buy baking soda. We had to buy whatever we needed for that make and take. We're making bath bombs. We're making lip balm. And we had to buy the containers. And all of that is a tax deduction. Now, if you're going to charge for that class, say $10 for 2 make and takes and $15 for 3 make and takes, then you don't deduct those things that you're outright selling to the people who are coming to your make and take. You only deduct the things that you had to purchase for your showing them and extras for the next make and take. You never know. But just I just keep all those receipts. I keep every single receipt. So that's the main thing about giving small parties.
That's true. Vacation is deductible. We're going to talk about business travel, business transportation versus over the road or on the road expenses. If you bring your spouse and your family along, IRS doesn't care. As long as this is a business trip that you're going on, that you're using in conjunction with vacation, all that's deductible. Maximize the use of your business car. I discovered something late in my government contractor's career. I was a transportation logistics instructor, and I used to travel around the world teaching that. The IRS actually allows you to deduct the amount of dry cleaning for your clothes. They actually have a rule that will allow you to do that. So doing your business has all kinds of perks that you don't see on the top. So okay, let's talk a little bit about traveling. Traveling overnight or any period that needs sleep, the IRS calls that a strange bed rule. That's deductible as long as you're going to a business appointment. It doesn't matter how far that is. There is no limit to business travel. And if you're not staying overnight, like you go to Columbia for the day and come back, those miles between where your home office is and where you go to in Columbia, Missouri and back are all business related miles. If you happen to have fun on the side and visit with your friends on the side, IRS don't care about that. That cost is all deductible. But let's kind of explain now what some of the terms are talking about. Transportation expense. Say you were going to California. No, we're going to convention and we're going to fly. So the cost of the airplane is a deduction. And when you get to Salt Lake City, you need to be able to get to the Salt Palace and to your hotel. So you have to rent a car to do that. That's also deductible. Those are transportation expenses. Say you're driving now though. If you're going to drive from wherever home is to Salt Lake City. The kinds of things that you can deduct on the road are lodging, again, meals, because you're not going to do that in a day if you're going from Illinois anyway to Salt Lake City. Any laundry that you have to prepare for and dry cleaning, all are costs associated with transportation expenses and a part of your business deduction. On the road, that trip to Salt Lake City, you're going to have to stop a couple of times. 3, if you're like me, I typically drive 300 miles a day because that's the IRS rule. Sort of jumped ahead on that. It's got another slide that's going to tell you about that. But if you're going to be stopping in a hotel and whatever amount of money you spend for the hotels going and coming back, all that's deductible. Any cleaning that you do is deductible. If you give tips to folks at the hotel or you eat along the way, 100% of the hotel cost is deductible. Dry cleaning and tips are deductible, but only 50% of the meals is deductible. You know why? The IRS says you were going to eat anyway. So they allowed you to deduct half of your food bill. So again, if you're not in a home-based business and you did this very same trip, all that's out of your pocket and you get nothing back.
And you don't have to worry about, taking the 50% for meals because TaxBot does that for you.
This is a breakdown of what those transportation expenses might be. $6 for drinks, $4 for the SkyCap tip, roughly $7 for breakfast, $12 for lunch, and so on. 50% of the meal rule there. Total expenses for everything less the airfare is less than $75. Do I need those other receipts? Remember what I said about the Camel? I keep them all. It's easier to support your deduction with the IRS if you have all of the receipts and not have to dance around, well, we did this, that, and the other thing, but I don't have anything to prove that. It's so much simpler to keep everything associated with your business. And we do that monthly. And I'll show you later on in the slide presentation how we get that done. Because as you're doing it, it's much easier if you come home and file it away somewhere immediately. Then at the end of the year, when you start putting together your tax package, if you have TaxBot, you're going to be putting the majority of that stuff in there. But if you don't, as in my case, I keep file folders, and everything, all expenses that we have go in there. So if you bring your spouse along, this is how you can expand your business, but it's kind of interesting how the IRS looks at this. If you bring your spouse along, how do you do that? You can bring them along as a traveler or a bona fide employee. Now, if you're going to take the bona fide employee side of this, you have to do some things. You have to generate a timesheet that specifies when they worked. You have to have a job description of sorts, and you have to document how many hours they worked. Not hard to do if you're proactive and know you need to do that. If your spouse is a bona fide business partner, that is, they get involved in marketing, they do computer work, they talk to potential clients, you can do that. But again, you have to have those specific details in terms of that work relationship codified. You have to have all that written down and a part of the business plan that you have that support that this is a business and not a hobby. And again, if you want to drive yourself, like I said, from home to convention, you can deduct the cost of that business trip, because that is business. Even though you're going to convention, that's a part of your business development. The IRS allows you again to capture the information over the lodging and the meal expenses. And the rule of thumb for the IRS, a full day's driving is a 300-mile day. And when we drive to convention, it takes us 4 days to get there. And I think I read last 2020, the mileage for the IRS was 58 cents a mile. And we go roughly 2,100 miles one way. Think about how much money you just saved on your taxes just by taking your car. So there are all kinds of things out there that will help you save money. On occasion, I've mentioned convention and seminars, that kind of stuff is automatically deductible for you. But cruises and Young Living from time to time offers incentive cruises. There are some rules. Obviously, whenever you mess with the IRS, there are always going to be some rules. There are 4 requirements. The cruise ship that you're going on must be a U.S. flagship, and it must stop at all U.S. ports or U.S. possessions ports. You must submit 2 pieces of information. One signed by you that says the day that you did the transportation, the number of hours the trip took, the program schedule. And I will tell you, when Young Living has a cruise, we have classes the whole time we're at sea. You get an opportunity to not only be on the cruise and experiencing that, but you're being trained as well. So it's an excellent opportunity. You need a statement from the officer, from Young Living officer that arranged this, or the ship's officers verifying or validating that this did in fact take place. More than 50% of your total days should be spent on business. When you go to convention, you'd be hard pressed with all the breakout sessions and all of the big group presentations that you're not going to spend the majority of your days in a training environment. If the cruise is 14 days long and you did a 1-day seminar, you're not going to be able to deduct that. So again, meticulous records on what goes on. And that's the only thing that you have to worry about. Again, it's a no-brainer for conventions because we're always in sessions. You have to attend at least 2/3 of those activities, and that allows you to qualify for the 4-hour and 1-minute rule. That's what qualifies you to deduct what it costs you to go to be trained in the conventions or the various seminars that happen around the country.
What's the 4-hour and 1-minute rule?
Hmm?
What's the 4-hour 1-minute rule?
You have to be in class for 4 hours and 1 minute.
Oh.
Every day. So, and as I said, that's not a difficult thing to do in Young Living conventions and seminars. That's pretty much why you're there. You're there in a training session. Documentation and audit proof techniques. As I said before, keep all receipts, even though you don't need them. Keep a good diary or record of what happened at each of the events or training sessions that you go to. My recommendation, as I said earlier, I keep all this stuff in a file folder. I have 12 of them. And month by month, as things come in, I put it in that folder. And at the end of the year, we go back and we consolidate all of the expenses associated with that home-based business. So, know what the IRS considers business travel. You can hire your spouse. Just make sure that you do the proper documentation. If you want to go and couple your business trip with a vacation, that's easily done because the IRS doesn't care how many people you take with you, as long as you are going for a specific business-related event. Track all your meals and your lodging costs. Drive at least 300 miles every day toward your destination. You count your beginning travel day as a business day. So you get, and the last, that's also a business day. You can attend conventions and seminars, and it's a great way to learn anyway about the products that you have. Matter of fact, when you go to convention, that's when all of the new stuff is usually released. So you get a real good jump on knowing what's coming down the pipeline. And know about how to audit proof, and that is you document with those 5 headers, and you keep all your records. That's the only thing that you really have to be really diligent about. Don't throw away anything related to expenses associated with your business. Now, we've been talking about this home office. What is the home office anyway? Well, IRS has a rule for that as well. The IRS's first answer or question to be answered is this the principal place that you do your business in? It's a place that you use to meet and deal with your clients and your customers, and it's not a separate structure. If you do 50% of your total work hours out of your home, then your home qualifies as your principal place of business. And the Solomon exception stipulates that this office is used to conduct administrative or management activities of your business, and there is no other office where you conduct substantial administrative activities. You have to identify a specific place or specific places wherever you're setting up in your home for your work. And there's a specific reason for that we're going to be covering in just a second. So, home office rules. Allocating indirect expenses. What that equates to is where specifically in your home is this office. You can calculate the amount of indirect expense, and you'll see how this relates to your home on this next slide. A couple of examples of calculating. First method looks at the percent of office space as a factor of your entire house. You have a 2,000 square foot home and your office is a 10 by 20 or 200 square foot room. The allocation of your indirect expense would be 200 divided by 2,000, which equals 10%. Now, what does that mean to you? That means that 10% of all of the expenses associated with the upkeep of this home is deductible. Let's take another one. Another method would be the number of rooms method. Take the room used for your home office and divide that by the number of rooms in the house. If you have an 8-room house and you use one of the rooms for your office, that's 1/8 or 12.5%. Since the IRS rounds up after 50 or above and round down after 49, you actually end up with a 0.5% more deductibility. It's now 13%. Let's take a look at our case. Chris has a formal office in the home. She conducts classes in the home using our great room, our living room. When we get more than 6 or 8 people, we can actually move downstairs, which is a bigger space, and we're going to accommodate more people. If we serve refreshments, we tend to consume those in the kitchen area around our island. So the kitchen and dining area is also used. We use approximately 42% of our home when we do our home-based business. This means 42% of all expenses associated is deductible. That's no small piece of change.
Electric bill, heating bill, yard maintenance. Look at this list.
3 most important pieces of advice. Find yourself that small business tax accountant, keep meticulous records, and don't do shortcuts. Keep all your receipts. Create a mileage log if you're going to be using your personal vehicle.
TaxBot does it for you.
Any receipts for mail, if you're mailing out flyers to potential customers, I've been saying that word all night. I can't remember. I'll get it. Candidates for your business, and you're mailing stuff to keep the receipts from the post office. They give you one every time. Keep your electric bills, your TV bills, your water bill, your home security bills, your landscape improvement bills. Young Living products, because you have to buy them in order to get commissions, that those purchases are tax deductible. And as I said, and Jay, the list goes on and on and on, because I have a lawnmower that I use to keep the grounds up. If it breaks down, I take it to the repair shop and that becomes a tax deduction. So there are all kinds of opportunities for you to save money in the long run with your taxes. This is the criteria that you have to prove to the IRS. I have that what you have is a business and not a hobby. You have a business plan with projections. You really have a business plan that you don't have to write down, because if you come in, you typically are aspiring to a particular rank in Young Living. You start out as a distributor, and as you begin to build and grow your organization, you're looking for the next promotion. That's your projections. That's what you're working toward. You have in your own statements can mess you up. I'm just looking at the products. Well, that doesn't bode well for your conducting a business. You need to conduct activities like it was a business. You have business cards. You have flyers to promote the products that you're talking to people about. You have to do business-like things. You go to training activities to grow your experience and to improve the profitability of your business. If you had prior business experience, that works well for you because you already understand some of the things that you have to do. But this is a vehicle that you can learn as you go. But you also have your upline that you can also tap to get information and recommendations on how to best approach that growth that you're attempting to attain. You did advanced research for yourself when you were looking to come into Young Living. You tried out the products. All those things are business-like related activities to support that you are really seriously looking at this as a business. You devote time regularly to activities. Now, it's kind of tough to do last year and this year with COVID all around there, but even because they have these virtual activities that you can become part of, that shouldn't stop you from being able to conduct that kind of business for yourself and to support that this is a business that you're working with. You have a history of income and losses. Again, since Young Living's business structure is a rank-based business structure, you're constantly attempting to attain the next rank. So that's a part of your upward mobility and projection for growing your business. So those kinds of things all lean toward that. You have a history of your income. The catchy thing, and I've run into some people that have done this, is if you have income from other sources, the IRS tends to look at your business model as suspicious. And let me tell you the activities that they are really suspect of. If you have a Young Living business and you're also into antique collecting or stamp collecting, or you have a travel business, or you have a recording studio, or you have a training dog show business, all of these are dicey concerns for the IRS because there is no guaranteed profitability for you in the short term. And in the short term for the IRS, that's roughly 7 years. You need to show a return on your investment within that period of time. Matter of fact, I had a buddy that was a small business accountant, and I was talking to him about that window because I didn't know it was 7 years at the time. And he said that it's kind of hit or miss when and or if they try to bring you in for an audit, because he said he has some clients that really spent a lot of time and money watching the ponies run, and they hadn't been audited in about 9 years. And that was one of the businesses that they said that they were running. They were in the sport betting business. So there are certain things that you need to steer clear of. And anytime that you bring on something that's going to complicate what it looks like you say you're doing, please avoid that path. It save you a whole lot of headache down the line. And Chris has been talking about TaxBot. It's an excellent tool. I'm here to tell you there's a 2-week free trial, so you can test drive it as you will. You can test drive it to see whether or not it's something that appeals to you. And if you decide that you want to lock it in to work for yourself, you can go out on the virtual office, member services, and the business center and tab, and the link to take you to TaxBot looks like this once you bring it up. And Young Living members get a 50% discount on the cost of that tool,
which is equivalent to $5 a month. So it costs me $5 a month, which, oh, by the way, is a tax deduction.
So,
and I print off every one of my receipts.
So all kinds of ways for you to grow your business and get help from the IRS. So we've talked about creating a home-based business. I hope that you can see the advantages of doing this, because I don't know of any place that you can aspire to making the kind of money that you want. And the only thing in your way is you getting started. Documenting your business properly will save you lots of headache and nightmares in the long term and money. Your Young Living Oils is an excellent way to grow your income and to share God's healing plants with your friends and neighbors and the world. That concludes my presentation. I will entertain any questions that you might have.
They'll have to unmute themselves.
Oh, you'll have to unmute yourself if you have any questions, but I hope that this will go in some distance for you, understanding the kinds of things that you need to do if you are in fact thinking about having a home-based business. It is crucially important that you set it up the right way, that you monitor and maintain all the specifics, because the IRS is really the watchdog in this business, and they will call you in. I said, we've only been called in twice in the 21 years, but they did call us in because something that we did, they didn't agree with. So as long as you can prove it, and as long as you can document what you spent to get it done, you're in a good place. Do you have any questions?
Okay, Kenneth, I got a question.
All right,
So, if I want to actually start the business, do I have to go down to, like, what is it, the tax office
No.
in Clayton County, or do I do it through Young Living? If I want to start it as a business, like
You are
I've been taking
already
a business. If you are a wholesale member, you should have
Oh.
started keeping your tax receipts from the moment you became a distributor, and every single purchase you have made every single month since you signed up as a distributor is a tax deduction.
Okay.
Because you must order 100 PV minimum in order to qualify for all commissions and bonuses. That shows that you are a business owner.
Okay.
You don't have to go and talk to anybody. You don't have to sign anything. You're already up and running.
Okay. So I got another question now. If I can't find them receipts, can I get them back? Can I print them out?
I don't know that Young Living.
Oh yeah, every receipt of every order that you've had for the past, I think mine go back 10 years.
Right.
Under my account and my order history. You just have to open it up and print them off. Open it up,
Okay.
Print them off. And now that Young Living doesn't put in a full receipt in the boxes that you receive, I had to arduously go through and print off every month. And oh, by the way, I don't only order on ER, so I had to do my shops as well. And many times I will send gifts through my Young Living to my people, or it might be a baby gift of the seedlings. All of that's deductible, and that goes under business gifts. TaxSpot has a breakout for business gifts, business shipping. It's just, you just break it out into those different categories.
Okay.
So do you calculate the taxes as well?
Nope.
No, that's your tax accountant's business.
Well, and that's what TaxSpot does. TaxSpot at the end of the year, after I get all my taxes in there, and oh, by the way, TaxSpot directly connects to any business account that you might have. For example, my business account is with US Bank. So any purchases that I make on my debit card, whether it be on Amazon or go to Target or pay for meals or whatever, is directly connected to TaxSpot, and it brings it up and says, this is a business meal. So that is like 80% of my tax work. Once I get all of those taxes in for the year, I I calculate those reports and I send those reports via email directly to my small business tax man. And then he does the 50% and the 42% of the house. And because he knows that we're deducting 42% of our house. So he does all that. We deducted $85,000 in taxes for tax year 2019. For small business owners that are just starting their Young Living business, you will make more in your first year in tax deductions than you will in actual commissionable monies, if that makes sense. Does that make sense?
Makes sense.
Yeah. And you can take a loss in your business for up to 7 years. In other words, you don't have to make a profit. It's going to cost you a bit before you really start the money rolling in, and you're making way more than you're putting out for getting those clients to buy into your thoughts and your product and all of that. So you really want to deduct every tax, because you're going to get back so much more in taxes. Especially, I worked a full-time job when I started Young Living, and I was paying about 20%, at least 20% or 22% in taxes from my government job. And I was able to get a lot of that back. I mean, if you can get $22,000 back at the end of the year, that of monies that you had to pay out in your regular business, that is income. That's $22,000 you wouldn't have gotten back had it not been that you raised your hand and said, I've got a home-based business.
Okay.
I think these questions have been great. Anybody else got one? And are we answering them to your satisfaction?
Well, silence is golden. I wish for you all a prosperous 2021. And I pray that you all stay safe and healthy. And when I see you again next year in the big chair, I hope all of you will have great success. So without any further ado, I'm going to stop. Yes, Zakia.
Oh. I think we got some reverb.
Yep. We're going to call it a night, ladies and gentlemen.
Stop the recording.
Stop the recording if I can get.
What is next week?
I'm trying to stop the recording, and you keep moving the mouse. I can't do it with you moving the mouse.
April wanted to know what it. Oh, she's checking, April.
It's trying to stop the recording first.
It's basic kits and
Basic
starter kits.
compensation plan.